Moving on, last thing of this week's version. After decades, the Nikkei hits a new record, sort of, we will say.
Yeah. So the Rob is talking about the Japanese stock index. This is their version of the S&P 500 or the Dow Jones Industrial Average. And it last hit its high in 1989. And from
Correct.
what I've seen, I think these guys set a record at 35 years for the longest period for any industrialized country between highs on their stock market. And so last week, they finally overtook the 1989 high. Here's the issue, though. We had a DKI intern, Andrew Brown, pull a chart of the Nikkei index, but in US dollar terms. And that's actually down over the last 3 years. So what's happened is the value of the Nikkei has gone up in yen, just as the value of the yen has gone from about 105 to the dollar to 151 to the dollar. So you don't really have an increase in the buying power of the Nikkei. What you really have is the yen sliding against the dollar. And the tagline on this, which really makes a lot of sense because it's the index is right around 40,000. It's just under it. But basically 40,000 yen in 2024 does not buy what 40,000 yen would have bought you in 1989.
What's the sentiment, Gary, just in general terms of, what either the Bulls or the Bears are saying, right? Is it a situation where the Bulls are looking at this as a spin from a positive standpoint? And then how does the market even react, or what is their take? Or do they even realize that this is the case and why they're sitting at this high?
So I think people are very focused on the fact that the Japanese went 35 years between highs. I think people are realizing, my God, this is just taking forever for a recovery. The more interesting part about it is there was a lot of talk last week about Warren Buffett's, very smart acquisitions of a whole bunch of Japanese companies or stock and a bunch of Japanese companies a few years ago. And those stocks are up a huge amount in yen terms. Now, I don't know what his cost was on this. So, we're looking at the Nikkei index. And so some people are saying, my God, that index is up. In fact, hold on, Rob, I've got the chart here. If we go back just a few years ago, that index was right around 20,000 in 2020. It's almost doubled in the last 4 years. Now that sounds amazing, right? But when we take a look at this, if had you bought that, would you have been up? Not in dollar terms, you wouldn't have been. So the only way to have made those huge returns is you had to either take yen currency risk, which has been a giant disaster, or you had to hedge that risk out, which is expensive. The point of all this is it's very easy to look and say, the index is up in yen terms, it's doubled, everyone's done really well. But if it's doubled in yen terms, but the value of the yen has come down, it's not up as much as people think. And if you're going to make these bets, then you really need to understand the currency risk that you're taking and understand that if you hedge it, it's going to be expensive and you could lose on the hedge. But if you don't hedge it, then you're not, those returns aren't really doubled, again, in dollar terms.
Great. Gary, thanks again.